Many seniors across the country are waking up to headlines that sound alarming. The words are strong, the warnings feel urgent. Some reports are even claiming that a new government bill could cut Social Security checks. And if you rely on Social Security to pay your bills each month, hearing something like that can immediately create worry. Because for millions of retirees, Social Security is not just a supplement, it's the foundation of their monthly income. It helps cover groceries, medications, utilities, rent, and everyday living expenses. When people hear the words benefit cut, it naturally raises one big question. Is my monthly check about to shrink? That's exactly what we're going to talk about today. Not rumors, not dramatic headlines, just a calm, clear explanation of what is actually happening in Washington, what lawmakers are discussing, and what it could realistically mean for retirees like you. And if you follow updates about Social Security, retirement benefits, or federal programs that affect seniors, take a moment to subscribe to the channel. This community focuses on explaining complex financial updates in simple, practical language so you can stay informed without feeling overwhelmed. Now let's start with the reason these headlines are appearing in the first place. Right now, lawmakers in Washington are once again discussing long-term changes to the Social Security system. These discussions happen every few years, especially when new financial projections about the program are released. You may have heard the phrase Social Security Trust Fund mentioned in the news. That trust fund is essentially the reserve pool that helps the program pay benefits when incoming payroll taxes are not enough on their own. For decades, American workers have paid into Social Security through payroll taxes. Those contributions fund the benefits that retirees receive today. It's a system built on generations supporting one another. But there's a demographic shift happening in the United States. Millions of baby boomers have already retired or are approaching retirement. That means the number of people collecting benefits is growing faster than the number of workers paying into the system. As a result, policymakers are debating how to make sure Social Security remains financially stable, not just for today's retirees, but also for future generations. And that's where the new bill being discussed comes into the picture. Some lawmakers are proposing adjustments to the way Social Security operates over the long term. Supporters say these changes could help keep the program financially strong for decades to come. Critics worry that some of those proposals might reduce benefits in certain situations. This is where many people get confused. When a bill is proposed in Congress, it does not automatically become law. In fact, many proposals are introduced every year that never move forward. But once a proposal appears in the news, headlines can sometimes make it sound as if changes are already happening. Let me explain why this matters. Social Security benefits are protected by law. Major changes to the program require approval by both houses of Congress and the President. That process usually takes months, sometimes years. So when you see warnings that say something like benefits will be cut, what's usually happening is that lawmakers are debating possible solutions to long-term funding challenges. Those debates are not new. In fact, Social Security has gone through adjustments many times over the decades. One of the most well-known changes happened in the early 1980s, when lawmakers passed reforms designed to stabilize the program after financial pressure began building. Those reforms included adjustments to payroll taxes and gradual changes to the retirement age. Since then, Social Security has continued paying benefits every single month to tens of millions of Americans. Today, roughly 70 million people receive Social Security benefits. That includes retirees, people with disabilities, and family members who qualify under the program. For many households, that monthly deposit is one of the most reliable forms of income available in retirement. That's why even the possibility of a change can create so much concern. Now here's the key point to understand right away. The discussions happening in Washington right now are primarily focused on long-term sustainability. Lawmakers are trying to determine how the program should be structured decades into the future. And most proposals being discussed do not involve suddenly reducing checks for current retirees. Instead, many of the ideas being debated involve gradual adjustments that would mainly affect younger workers who have not yet retired. Still, when people hear the word cut, it's natural to imagine the worst-case scenario. So let's slow this down and look at the situation realistically. Social Security is one of the most politically sensitive programs in the United States. Millions of Americans depend on it. That means any proposal affecting current retirees tends to face extremely strong resistance. Historically, lawmakers have been very cautious about making changes that impact people who are already receiving benefits. But that doesn't stop the conversation about how to keep the program stable in the future. Here's what's driving that conversation. According to recent projections from program analysts, The Social Security Trust Fund may face increasing pressure in the coming years if no adjustments are made. That does not mean the program disappears. It does not mean checks suddenly stop. What it means is that lawmakers are trying to find ways to strengthen the program before financial stress becomes more serious. Different political groups have proposed different ideas. Some believe the solution is to increase the payroll tax cap so higher earners contribute more. Others suggest gradual adjustments to retirement age for future workers. And some propose changing the way certain benefits are calculated. Each of those ideas has supporters and critics. That's why debates about Social Security often become intense. But again, it's important to separate policy discussions from actual changes to your monthly benefit. Right now, Social Security payments are still being issued on the same schedule they have followed for years. Retirees continue receiving their monthly deposits based on the established payment calendar. COLA adjustments are still calculated annually to help benefits keep pace with inflation. And the Social Security Administration continues processing new applications for retirees and disability recipients across the country. So while the headlines may sound dramatic, the system itself is still operating. Here's what this means for you. Understanding these policy discussions can help you stay informed without feeling alarmed by every headline that appears online. And over the next few minutes, we're going to break down exactly what lawmakers are debating, which proposals are gaining attention, and which ones could realistically move forward. Because once you understand what's actually being discussed, the situation becomes much clearer. In fact, many of the proposals being mentioned right now involve adjustments that most current retirees may never experience at all. But to see why those ideas are getting attention, we need to look more closely at the specific changes lawmakers are considering and how they might affect the Social Security system over time. And once you see how those proposals work, you'll understand why some people are calling them cuts, while others say they are simply adjustments designed to protect the program's future. Now that we've talked about why these headlines are appearing, let's take a closer look at what lawmakers are actually discussing, because this is where many people get confused. When you hear that a bill could reduce Social Security benefits, it doesn't usually mean that current retirees will suddenly see their monthly checks drop next month. What lawmakers are debating are long-term policy adjustments that could affect how the system works in the future. One of the ideas that often appears in these discussions involves the retirement age. Right now, the full retirement age for most Americans is between 66 and 67 depending on the year they were born. Some policymakers have suggested gradually increasing that age for younger workers in the future. Supporters say people are living longer and working longer, while critics argue that raising the retirement age can effectively reduce lifetime benefits. Another proposal focuses on the payroll tax cap. Today, workers only pay Social Security taxes on income up to a certain limit each year. Some lawmakers believe increasing that cap would bring more money into the system and strengthen the program's finances over time. There are also conversations about how benefits are calculated. Social Security uses a formula based on your highest earning years. Some proposals suggest adjusting that formula for higher income earners so the program remains focused on helping those who rely on it most. Another area being discussed is the annual cost of living adjustment, commonly called COLA. That adjustment helps benefits keep pace with inflation. Some proposals have suggested changing the inflation formula used to calculate future increases, which could slightly slow the growth of benefits over time. This is where many people misunderstand what cuts really mean. In many proposals, the discussion isn't about taking money away from people already receiving checks. It's about adjusting how future benefits grow. But understanding those proposals is important because even small policy changes can shape the future of the Social Security system and how benefits are calculated for the next generation of retirees. Now let's talk about the question that matters most to many retirees. What does all of this actually mean for your Social Security payment? For most people who are already receiving Social Security benefits today, the answer is reassuring. The monthly checks you receive are based on a formula tied to your work history, your lifetime earnings, and the age at which you chose to claim your benefit. Once that benefit is established, it generally remains stable, aside from annual cost of living adjustments and certain deductions, such as Medicare premiums. Here's what this means for you. If you are already retired and collecting Social Security, your monthly payment is not suddenly being recalculated because of a proposed bill in Washington. Changes to the program almost always focus on future retirees rather than people who are already receiving checks. That has been the pattern for decades, but there are still a few things that can influence the amount you receive each month, and understanding them can help you avoid surprises. One of the biggest factors is the cost of living adjustment, often called COLA. Each year, the Social Security Administration reviews inflation data and determines whether benefits should increase to help retirees keep up with rising prices. When inflation is higher, the COLA adjustment tends to be larger. When inflation slows down, the increase is usually smaller. Another factor that affects monthly payments is Medicare. For many retirees, Medicare Part B premiums are automatically deducted from their Social Security checks. If those premiums rise in a given year, the amount deposited into your bank account may look slightly different even if your benefit itself increased. Taxes can also play a role for some households. Depending on your total income in retirement, a portion of your Social Security benefits may be subject to federal taxation. This doesn't apply to everyone, but it's something many retirees discover after they begin receiving benefits. Let me explain why this matters. Sometimes when people see their deposit change slightly, they assume their benefit has been cut. In reality, the difference may come from Medicare deductions, taxes, or other adjustments. Another important step many retirees overlook is checking their earnings record. Your Social Security benefit is calculated using the highest earning years from your work history. If there are errors in your earnings record, it could affect your benefit calculation. That's why the Social Security Administration encourages people to review their records periodically through their online Social Security account. Understanding these details helps you separate real changes from normal adjustments, and it also helps you stay confident that the system is still operating the way it was designed to, delivering monthly benefits to millions of Americans who earned them through decades of work. So after hearing all of this, what should seniors actually do right now? The most important thing is not to panic over dramatic headlines. Discussions about Social Security happen regularly in Washington because the program is so important to the country. Lawmakers debate ideas, proposals appear in the news, and sometimes those ideas move forward. But the vast majority of the time, those discussions take years before anything becomes law. Here's what this means for you. If you are currently receiving Social Security, your monthly benefit continues under the existing rules. Payments are still being issued on the regular schedule, and the Social Security Administration is continuing to process claims, adjustments, and annual cost of living increases just as it always has. What you can do right now is focus on the things that are within your control. First, review your Social Security account occasionally to make sure your earnings history is accurate. Even small corrections in your work record can make a difference in how benefits are calculated. Second, stay alert for scams. Whenever headlines about Social Security appear, scammers often try to take advantage of the confusion. Remember that the Social Security Administration will never call you asking for fees, gift cards, or banking information to release your benefits. Third, plan your monthly budget based on the income you currently receive, not on rumors about future payments. Stable planning can make retirement much less stressful. Before we finish, here's the most important takeaway in simple terms. Lawmakers are debating ideas about the long-term future of Social Security, but the system itself continues to operate and send benefits to millions of retirees every single month. Staying informed helps you understand the difference between proposals and actual changes. And if you feel comfortable sharing, let me know in the comments which city and state you're watching from. Many retirees across the country are following these discussions, and your questions or experiences may help someone else better understand their own situation.